Hello, hello. So we did take a look at Microsoft's earnings, and now we are going to be taking a look at Alphabet, which also came out with its earnings report. And are seeing a decline right now in the after hours. The shares drop as cloud miss overshadows better than expected overall results. And you have to remember that Microsoft's cloud results were rather impressive. So this may be one of the reasons why Google's cloud miss was affected here and actually did worse than expectations. Now, the first thing to take a look at is what is going on with the stock price right now. After hours, it's down 4.3%. In the after hours, again, about $134. Now, this is a stock I own. I bought it, I made a video about it a few months ago. I bought it when it was near 118, I believe, so it's all well. But right now, sitting at 134, we are going to be taking a look on whether this is a buy right now, after taking a look, of course, at its earnings report, because it's important, see what happened in the quarter. So they reported revenue growth of 11%, returning to double digits for the first time in more than a year, understandably. So we talked about this, all tech has been affected, and not only, pretty much all businesses, all big companies and small companies in the US and everywhere in the world. So now they're returning to double digit growth. Now can take a look at the financial statements of the past, and you will see that for the most part they have been having fantastic revenue growth, but last fiscal year basically less than 10%, so less than double digits. So now they are returning to at least marginally double digit growth here, 11%. And again, that's for the quarter, right? Now, they reported 11% revenue in the third quarter as a rebound in advertising pushed expansion into double digits for the first time in over a year. I have to tell you something really, really important here about Alphabet, because I know it firsthand. I'm pretty much a YouTuber, so I am part of their advertising. Now, Google recently has banned pretty much extensions, the Chrome extensions that do not allow ads to be played. It's basically like blocking the ads, pretty much the ad blockers. So they have banned them. And at least it's tougher to have a workaround right now. As earlier, you would be able to just install a plugin on your Chrome browser, and it wouldn't play the ads. Right now, they're going hard on that, and so more people will have to be watching their ads or signing up for their premium service. That's like Google Premium or YouTube Premium or something of that sort. In which case you won't be having ads, but you are paying some money. So that potentially means that for the next quarter, I personally would have some expectation of higher revenue and higher net income. Now, of course, it's a thing that's potentially known. It's going to be talked about in the guidance. I don't know if guidance is out yet. Maybe this will affect it. So we'll see, because it's this. I'm making these videos pretty much just a few minutes after the results are out, so things are constantly getting some changes here as new things come out, as new information comes out. Now, what happened here, regardless of what is going to be happening with guidance, earnings per share 1.55 versus 1.45, so that's a pretty handy beat here, nice to see. And revenue also beating 76.69 versus 75.97 that was expected. So beating on both pretty much earnings and revenue here. Very nice to see, top and bottom line beats. YouTube advertising, again, higher than expected, and I think it's going to be significantly higher in the next few quarters. At least that's what you would think after they are banning all the pretty much blockers, the ad blockers. Now, Google Cloud revenue, and this seems to be overshadowing again the results, which is frankly a little bit weird, because you're seeing less revenue, but it's marginally less. I guess they are waiting on pretty much growth here. They are asking for growth, and they are not saying the growth is the problem, and this is why they are looking at potentially selling the stock right now. At least we're having some sell-off right now in the after hours. Now, traffic acquisition costs about the same, 12.64 versus 12.63, so almost exactly to the point what was expected. And double-digit increase in revenue comes after 4 quarters of single-digit expansion. We talked about it. It was less than 10%. And for the third quarter, the company reported advertising revenue of 59.65, and YouTube advertising revenue beat analyst expectations. Again, expecting potentially to keep doing well, I think. Now, cloud revenue was a problem. Again, we talked about it, missing the mark by more than 20 million. It's not much, but for the street wants growth, they want expansion, and they can punish you if that doesn't happen. But it could be an opportunity as well for new people getting into the stock potentially. Especially since this is a really, really marginal miss, frankly. Okay, we do know that there is competition in the cloud for sure. But for me, the most important thing about Google is advertising, and this is where I would want to see them thrive. And I think they will keep doing really, really well in the future. Now, even though the unit disappointed, cloud still grew 22% from a year earlier. So that's still pretty nice growth, frankly. And I think Amazon was like 27%, so it's not that far at all. Now, the business also swung to an operating profit of 266 million after losing 450 million in the same period a year earlier. So significantly better here. So company doing significantly better, and it doesn't make potentially a lot of sense that it is down. But again, that's what happens on news. That's what happens when not everything is stellar, and especially when the overall market is kind of reactive right now and kind of fearful. You can have the stock prices plummeting in some cases or losing steam for not much of a reason. Is the thing. So, following the launch late last year of OpenAI's ChatGPT, Google has been racing to add generative AI technology, is what companies are doing right now, to more products and testing it within core search. And this could potentially have a major effect on Google search. And obviously this is important because the more refined Google search is and YouTube search is, ads can be more refined as well, businesses make more money, and thus Google makes more money as well. This is how it works. Of course, if you have a return on investment, you are going to be spending more, and so YouTube is going to be making more. All right, so that's what's going on with Google. I don't think we have much about guidance yet. It will probably come out later, and it could affect the stock price. Let me just do a refresh here, not over here, on the metrics page. Just in case we have some news, I just want to see whether that's the case. So we go to our metrics page. And no, it's actually the same, if not worse, actually, right now, 4.6. So 133.6 is where we're at. And I have talked about it in a previous video, the fact that the P ratio is relatively low here, 29 and 29 for our price to free cash flow too. So this is very nice. And as it's down like 5%, this is going to be even better tomorrow when the market opens and this gets adjusted with the real actual values. And this is frankly not bad at all, and probably going to be somewhere around 28 or 27, potentially 28, I would assume. And outstanding shares that are going down because the company has been buying back shares, which makes a ton of sense because it's getting cheaper, and it was even cheaper at some point, and so they have been buying back religiously for a while now, and it's really, really nice to see. Okay, let's see here. I think I'm getting a little bit of an issue with my mouse. Oops, okay. Yeah, it got stuck for a little while. I don't know why. Okay, and let's go and take a look at the financial statements a little bit, especially the revenue I wanted to see and the net income. Now you will see that we are looking at almost $300 billion here and about 11% for the quarter increase. So if this keeps up for the next few quarters, we are looking at surpassing $300 billion here in total revenue. And the company has also been increasing its net income at a tremendous pace from 30 billion here to 60 billion over here, doubling it in like 5 years, and keeps doing really, really well. And I also want to, of course, take a look at our stock evaluator too, which will tell us that the company's revenue growth, again, we're anticipating probably something closer to 10% or maybe 12% this year. So I will go 8, 10 and 12 for the next few years, even though the company has been doing like almost 20% for most of its years and 40% back in 2021. And it could definitely happen at some point, maybe like in 2027 or 28, sometime in these 5 years, they could have like a 30%. But this means that we're gonna be doing even better than what we're accounting for here, because we are anticipating like 8% or 10% year over year, every year. And net income margins about 21 to 24% is what they typically do. You'll see that the average, the tool gives you the 5-year average 23%. So we're going to go 21 over here, 22 and 23%. And free cash flow margins, company does 90 to 100, the typical thing and the expected thing. That's exactly what we want to be seeing, by the way, out of most companies, doing somewhere around 80, 90 and 100%. And the annual return of 13% is what we are getting here. And I hit calculate, and where are we at? Now, with these values, you will see that our current price is sitting at 133, remember, because we are down. if it continues to remain low and at that price. We're sitting at 133 right now, and the low is at 70 with these projections over here, which could happen. It's actually not out of the question. And 90 and 114. And remember, I bought back when it was around 118 because I value the fact that the company has all these things going for it that are great. The fact that they keep increasing their revenue growth, the fact that they keep increasing their net income, they're increasing their assets, they don't have debt, they have great margins. So there's a lot going on for the company, which makes sense to be paying a little bit more for. And so 118, I think, was a fantastic price. 133 is a little bit more expensive, but it's not like super expensive. So if you are not buying volume, like a huge amount, it could potentially make sense to be buying near 130 for sure. But again, if you're buying a ton, if you're buying a lot of shares, it may be worthwhile waiting a little bit, see how it continues to do through the rest of the month or so, or the rest of the year, frankly, and maybe even wait the next quarter, see what happens, because we could have a decline in the overall stock market as well. But interesting things here, it looks like we're getting potentially people who want to be getting the stock are getting a little bit of a cheaper price here for not much, a little bit of a discount for not much of an issue here with the overall company. And this seems to be going down as well. So we could be seeing maybe something close to 130 when the market opens as well. Not out of the question for sure. And so, yeah, this may be, frankly, an interesting discount here, even though we're looking at, again, a great company, which just missed a little bit on its revenue, even though it grew 22%, remember that. So it grew 22% and it's down because it didn't grow like 24%, something of that sort. So that's what happened here, or even 23%. So that's what happened. That's what happens with earnings and reports. But overall, we do care about what the company is doing financially and what they did through the quarter. And the quarter, frankly, was pretty great. And I don't really care too much about the sentiment. And it's not that expensive either. So I think, frankly, it's more than likely almost like a present for people who want to be entering. Is the thing. Even though it's not the cheapest it has been, it's probably a fair deal here at near 130 bucks. Thanks for watching. Do tell me what you think about Google, and remember to watch the Microsoft video that I made earlier, because Microsoft also reported earnings just a few minutes ago. And if something really changes, if we get something really different out of guidance or anything, I will make a video about it and let you know. But right now, let me refresh one more time. Yeah, it looks like we're sitting at the same range. Thanks for watching, guys. I'll see you soon. Bye-bye.